So let's take just a minute and talk about two different sales reps, medical device sales reps. One that was brought up in the 1980s, 1990s, and one that was brought up recently. If I were to ask a sales rep who was brought up back in the 1990s to tell me about selling a device to a physician back then, he'd tell me that they were the glory days. What a physician wanted, a physician got. 30 days after a little skiing and a nice dinner, one could have on their desk a purchase order for 20 units. Not bad for a day's work. And now I go talk to this sales rep over here that's recently begun their career in medical device sales, and they'd sing a different tune. They would tell us that now the discussion includes topics like reimbursement and health economics and all sorts of acronyms like RVUs and CPTs and DRGs and ICD-10 CMs and ICD-10 PCSs and APCs and OPPSs and IPPSs and physician fee schedules. And oh yeah, by the way, if time permits, we talk a little bit about the medical device. It's totally different from the early 90s to present modern medical device sales. And they'd say, man, I wish I could go back to how it was back in the 90s. It was too easy. Well, if I said, what is it? What's changed? And they would say, health insurance companies have gotten in the way. The insurance company got in the way of the physician and their patient. Well, that last phrase makes no sense to me whatsoever in the year 2021. The phrase, the insurance companies have gotten in the way of physicians and their patients. So 200 years ago, all healthcare, in fact, 100 years ago, all healthcare was fee-for-service. And there's no problem. The physician provided the service, the patient provided the fee. There is an information asymmetry, but it was negotiable. Then at some point, the patient decided that they no longer wanted to pay, and they delegated that obligation, the obligation to pay the physician, to a health insurance company. It's my opinion that when the information asymmetry was that big between the physician and the patient, what they knew and what they knew, when that grew to such an extent, the patient ended up saying, look, I don't know what they're talking about. They're talking about single nucleotide polymorphisms. I don't know what those are. They're talking about magnetic resonance spectroscopy. I don't know what that is, and magnetic resonance imaging. The information asymmetry grew too quickly. Well, that's fine, but now the insurer, because we left and the insurance company came into our place to do the bidding for us, they get to make the decisions. We stepped away, they came into our place, and they now act as our agent, contrary to popular belief. We made the bed we're all sleeping in. When you are a member of a country club or a gym, you say, I am a member of such and such country club, or I am a member of such and such gym. When you say that you are a member of Aetna, you belong to Aetna. You don't belong to the physician. The physician has no stewardship over you. The physician has no profit and loss mechanism with you. Whether the physician gets paid, the physician gets paid whether they treat you or not, whether they treat, prevent, or cure illness. Thank you. Their economic role is one of an insurance company money extractor. Now, before any of you or your family members who are physicians, throw tomatoes, the economic role of the physician in the United States, I am not being pejorative when I say this, I am recognizing the economic role of a physician in the United States of America in 2021 is to extract dollars from your health insurance company. In fact, the same economic role exists for hospitals. They get to bill insurance companies. When a physician says, my patient, they misinterpret the relationship that they have with a patient in the 21st century. The patient doesn't belong to them anymore. They belong to the insurer. Upon returning home from a long day at the hospital, a physician spouse asks, darling, how was work at the hospital today? They should respond, well, it was great. I treated an Aetna member. I treated a Cigna member. But instead they say, I treated 2 of my patients. No. They ain't yours anymore. They used to be back when the patient paid the physician, but we left and the insurance company came in. They now represent us. Now, this was agreed upon that the physician would treat Aetna members according to Aetna medical policies when, upon completion of residency, they filled out the credentialing paperwork with Cigna and Aetna and Blue Cross and United. The doctor needed patients to treat, and where were the patients? They were with Aetna. So the physician walked outside after his first day of completing residency and said, hey, I need people to treat. I just finished orthopedic surgery residency. Where's all the patients? And Aetna raised its hand and said, hey, we got about 35 million of them if you want to treat them. And the doc was like, sweet, what do I got to do? And they said, fill out this credentialing paperwork, and then you can be credentialed with us to treat our members. So what changed? How did we go from 1993, when what the physician wanted, they got, to today, with all of this discussion of reimbursement and health economics and medtech commercialization? Well, for one, as I said, the patients continued to relegate payment of medical services to payers. And secondly, the internet was invented. There's 2 points of my thesis. One is that we stepped away from the discussion with our physicians because the conversation got too complex. The insurance companies came in. And the second point of my thesis is that the internet was invented. So let me explain that one. In 1997, Wood et al. Published a paper of research that was done in 1995 by the National Library of Medicine. A questionnaire was mailed out to 2,500 online users of the National Library of Medicine in 1995. The final response rate was nearly 83% of eligible respondents. About 70% of them, of the National Library of Medicine users, said that they had access to the internet. And of those, 90% had access to the World Wide Web. And remember, at the time, those were 2 different things. So of the 70% that had access to the internet, only 26% of them were actually using it to access the National Library of Medicine. So let's pause there for just a minute. What this means is that in 1995, the repository of information that was published and warehoused somewhere in the National Library of Medicine was just sitting there. And 26% of 70% of 83% of 2,500 people actually used the internet to access that information and read new clinical studies. Well, now what happened? Well, let me finish that thought. This means that the majority of clinical evidence that was in practice at the time, that was being used daily, was warehoused in the minds of physicians. It was warehoused in grand rounds at the hospital. It was warehoused in the medical library on the campus. But how inaccessible are those 3 things in 1995? So here was the information asymmetry, let's say in 1890, between the physician and now. And here's what it is in 1995, as more and more knowledge was gained in the field of medicine. It's now this enormous gap. We leave the discussion, the health insurance company comes in, but there's still a big, enormous gap. How are insurance companies supposed to know what's going on? Well, like I said, then came along the great democratizer of information, the internet. And what happened is this information asymmetry began to shrink. Insurance companies could now push back on physicians. With each passing year past 1997, June of 1997 is when PubMed went live on the internet for free. What happened was insurance companies that were down here were saying, hey, doc, what are you doing to our member named Nick? And the doc said, oh, I'm going to do this procedure on him. And the insurance company had to go, okay, we got a couple of medical directors, but they're not subspecialists, and you are. So I guess we'll pay the bill when it comes in. June of 1997 comes along. PubMed goes live. It slowly disseminates over the next decade or so. Worldwide, more and more papers are uploaded. A whole new industry of health technology assessment, HTA, was born. And now, in 1996, a physician, let's go back then, could rightfully say, who are you to argue with me? I went to UCSF. I graduated top of my class in med school. I went to the best residency. I subspecialized. I fellowshipped. I did everything. Who are you to argue with me? And nobody could raise their hand because all of their information was warehoused in their minds and at rounds at the hospital and maybe a library at the university where they practiced. No one could raise their hand, neither patients nor insurers. Now when a provider asks that same question, Thousands of hands go up and go, I can argue with you. The hands of Hayes and CADTH and Cochrane and NICE and OHTAS. And about 10,000 Nick Andersons raise their hand and go, I can argue with you. And they go, well, who are you? Did you go do the training I did? No, I just spent 6 weeks reviewing every imaginable piece of data published on chromosomal microarray analysis for such and such disease. I didn't need to go to medical school to learn all this because I was able to access the warehouse of information you had in your head by going to PubMed or by going to Embase or by going to Doctor Evidence or one of these websites. And so doctors are taken aback over the last few years being like, hold on a minute. When I was a doctor and my dad was a doctor and his dad was a doctor and his dad was a doctor, nobody pushed back. Nobody could because as we kept learning, we were warehousing that information in our heads. And now all of a sudden we got these kids, these 40-year-olds, I just turned 40. We got these 40-year-old kids sitting around going, I'll argue with you. And the doctors are like, okay, what do you think about Cologuard? Well, I have 100 opinions about Cologuard. I wrote a systematic review and meta-analysis of the data, which is level 1 evidence. When a physician renders an opinion off of their experience, it's level 4 evidence. So when a physician remarks and says, I think, Mr. Williams, you have Parkinson's, level 4 evidence. When Nick Anderson and the other 10,000 nerds in the world show up and go, hey, I've done a systematic review and a meta-analysis of the data, and I've reviewed all of this, and it was 76 papers, of which we included 43 in the publication. We extracted the data, we analyzed it. Actually, here's what the data suggests. Here's what the appropriate therapy should be. And again, for the last 6,000 years, physicians have not been used to that. Wait, who are these guys to argue with me? Now, let's talk about commercialization. For any CEO of a medical device company, a diagnostic company, a pharma company, you would be well served to consider the payer, the health insurance companies, as a customer. Now, I'm speaking to a broad audience of 1,000 people, so maybe you don't need to think about the insurance company depending on what your device is. But for many medical device startup companies and diagnostic companies, yeah. Aetna, Cigna, Blue Cross, United Healthcare, and all of them are saying, look, we take care, our members pay us $2,000 a month. We hold on to that money, and now what we do is when a claim comes in, we determine, per the evidence that nerds put together, whether or not that is an appropriate therapy for our member. If it is, we will reimburse the physician. If it's not, we don't reimburse the physician. Now, I want to make a quick point, if I haven't beat it to death. When the physician finishes residency and he goes out and he gets credentialed with all of these health insurance companies, you can almost hear Aetna and Cigna and Blue Cross and all of them scooting their chair up and sitting this far from him and saying, now you listen. I'm Aetna. Your job is to treat my member according to my medical policy. You got it? Now, whether we like that or not, we recoil because my physician is my cousin. My physician is my brother-in-law. I have a relationship with them. I golf with them. They're my friend. I don't golf. I ski with them. You know, I'm friends with them. I love them. They gave me a hug when I came in. You don't have a relationship with your health insurance company. They're these nameless, faceless bureaucrats that get in the way of the physician and their patient. Again, we don't belong to the physician. We belong to our health insurance company. We pay them. I am a member of United Healthcare. I am a member of Aetna. So you guys want the punchline for how to fix American healthcare? I probably shouldn't say this on tape. It's my billion-dollar trick. Single-payer systems work, says the libertarian from Utah. They actually do work, but not for the reason that everyone thinks. Single-payer systems keep costs down and give just as good outcomes as we have in the United States, not because there's only one option in England, and certainly not because the government's in charge. Do you know why they work? Because the physician works for the health insurance company. So here's how we can fix healthcare. The easiest solution to cut costs by 90%. The remaining 10% for BioHive next year. When a physician graduates residency, instead of getting a job at St. Mark's Hospital on 3900 South, they get a job at Aetna Hospital, treating Aetna members according to Aetna medical policies. The chief of vascular surgery is the medical director of vascular surgery. He or she gets to make the medical policy for how vascular patients are treated. And now all of these incentives realign. When the physician works for the payer, they are no longer an insurance company money extractor. They are the health insurance company. So if you want to know why single payer systems work, that's it. They work not because there's only one option. Why do we only want one? I want thousands of options of things. Why would I only want one health insurance option? And the other reason why they work is because the physician works for the payer, not because the government's in charge. So here's what Aetna and Cigna and Blue Cross and all of them should do. They should all come to Utah. They should start buying up hospitals that have apostles' names on the top, tearing them off, putting Cigna up there, asking everybody to turn in their white coats that say St. Mark's, hand them new white coats that say Cigna, and say, you now treat our members according to our policies, which frankly is what you're supposed to be doing anyway when you're credentialed with us. So when you're developing a new medical device, let's leave my fun theory aside. For any of you developing a new medical device or diagnostic test, I implore you to learn how to speak payer fluently. Become fluent in that language. What is a HCPCS code and why would I need one? What is a CPT code and why would I need one? Why would a hospital care about decreasing operating room time by 50%, but Cigna couldn't care less? Why would Cigna care if you decreased OR time by 50%? Frankly, they don't care. So when you learn these things and you go, wow, I've been developing my technology for physicians, I better develop it for the health insurance company, and then they'll get what they need, and so will patients. So I'll leave that. Thank you, everybody.